Hey, my name is James Mason. In this video we are going to talk about the bullish and bearish engulfing candlesticks. So what is a bullish and engulfing candlestick? Well, it is a candlestick that engulfs, the previous opposing candlestick, and it can kind of predict a trend reversal. So let's look at these. I went ahead and drew some little circles around the ones that I saw on this chart. So this one right here, this is a bearish engulfing candlestick, and what it means is the candlestick before this one is a bullish candlestick, meaning that the price was going up, but this next candlestick engulfed that candlestick. So what does this mean? Well, it can start signaling a downward trend pattern. Now, even though that this next one, went green, if you look right here, you see that it took a dip. So let me get my little trend line. Okay, so right here, from there to there, it lost 12 cents on this stock. So, is it 100% going to say that it's going to start downtrending or uptrending? Absolutely not. But it can be a good indicator as to what could happen in the near future. Because if you look right here, you see this, bullish run. Now, over here, we have another one. Actually, this is a good one, good example here as well. There was just no sense of drawing so many circles to outline them. But right here, at a different time frame, this is a bullish engulfing candlestick. So we have a bearish candlestick, and we got this good long body green bullish candlestick right after it. So if you look right here, yeah, it goes back down, but like I said, it can start showing kind of a reversal in a pattern. So this actually does go up afterwards, and it gets us to this point right here. Now, this is technically a bearish engulfing candlestick because you can see the green candlestick and you have a red one right there, and it goes down just a little bit, but then it goes back up, and so you kind of get the picture. This is a bullish one, this is a bearish one, and this is a bearish one. Now, right here is a good example of a very good reversal that it had actually shown, because if you saw this bearish candlestick happen and you waited for the next one and you bought in, let's say down here at this bottom, and wrote it down there, that lost 16 cent per share for this trade. Now, again, is it going to be 100% accurate? Absolutely not. I mean, nothing will be 100% accurate in the stock market. It's it's just a good indicator. Once you know what these candlesticks all look like and how to read them, of what you need to do to be able to handle this trade if a reversal started to take place. So really, if you're just going to use candlesticks to do your trades, I would say keep your time periods relatively short, because it could definitely reverse again on you. So basically, bullish and bearish engulfing candlesticks are one candlestick that engulfs the other, to be simple. So I hope you liked this video. If you did, please give it a thumbs up, please subscribe, and I will see you in the next one.